Hi everyone. Today's topic is dissolution of partnership firm. This is the last chapter in partnership, and this is one of the easiest chapter in partnership. Now let's understand the meaning of dissolution of firm. Dissolution of firm means closing the business and dissolving the firm. So here the business comes to an end and the firm is dissolved and the firm is closed, and the partnership agreement among all the partners also comes to an end. Okay, so in this process all the assets of the business are sold and the liabilities are paid off. So that is dissolution of firm. But dissolution of firm should not be confused with the dissolution of partnership. Dissolution of partnership includes admission, retirement, date, change in profit sharing ratio of the partners. Now, what we have seen in admission or in retirement. In admission, retirement, what happens? The partnership deed among the old partners come to an end. Right? The relationship, the partnership relationship among all the old partners come to an end, and a new relationship with new agreement starts in case of admission, also in case of retirement. So there is change in partnership agreement, but business continues. Business does not come to an end. There is only a change in the relationship among the partners, right? So dissolution of partnership means change in the relationship among the partners. That means all agreement comes to an end and a new agreement is made, but the business continues, right? Now, modes of dissolution or method of dissolution. Dissolution can take place by mutual agreement, or it is called voluntary dissolution. It is a voluntary dissolution, or voluntary dissolution means this is a dissolution which is agreed by all the partners. Compulsory dissolution. Compulsory dissolution takes place when all the partners are insolvent. That means all the partners become bankrupt. Dissolution by notice in case of partnership at will. Dissolution can take place on completion of venture. Supposing the partnership firm is started for a particular business, and when that particular venture comes to an end, the firm will also come to end. The business will be closed and the firm dissolved. Then lastly, dissolution by court. That means the court will give order for the dissolution of firm. Okay. So when there is a dissolution of partnership firm, what is the process of such dissolution? Number one, closing the books of accounts. That means whatever ledger accounts opened in the books, in the firm's book, needs to be closed. That means all assets and liabilities have to be closed. Then all the assets have to be realized. That means the assets have to be sold and converted into cash. Then payment of liabilities. Okay, all these three processes, closing the books of accounts. The books of accounts means all the assets and liabilities needs to be closed, and this is closed by opening a new account called realization account. Realization account is opened. This is a nominal account. It is opened in order to close the books of accounts. Closing the books of accounts means transferring the assets and liabilities to this new account, that is realization account. Okay, realization account is also opened or prepared in order to realize the assets. That means assets are sold through realization account, and payment of liabilities are also made through realization account. So this is a new account opened here with the objective of closing the books of account, right, and then selling the assets and paying the liabilities. And in this process of selling the assets and paying the liabilities, there may be a profit or loss. And this profit or loss is called realization loss or realization profit. And this loss or profit is shared by the partners in their profit sharing ratio. Then comes the settlement of accounts. How the accounts are settled. Now if there is a loss or maybe deficiency of capital, then these losses should be first paid out of profit, then it is paid out of capital, and lastly it is paid by the partners in profit sharing ratio. That means the partners will pay from their own fund by selling their personal property or by bringing their own capital, own money, and then pay these losses. Come to the payment of liabilities. Whatever money is realized here, this money along with the bank balance of the firm should be utilized towards payment of these liabilities. And this is the order of paying these liabilities. First, this money should be utilized towards paying the realization expenses. Then secured liabilities will be paid. Then unsecured liabilities. Then you will pay the partner's loan account. Then pay the partner's capital account. After paying all this, if there is any residue left, then that balance amount will be distributed among the partners in profit sharing ratio. Right? Now, in this chapter, what are you going to do, or what you will be asked in the question is, either you will be asked to write journals or you will be asked to prepare ledger accounts. Now, what are the necessary ledger accounts that you will be required to prepare here are: first, realization account. As I explained here, the objective of realization account here is to find out the profit or loss on realization. Number 2, partners loan account, that means payment of the loan here. Then partners capital account, and number 4, cash or bank account. Okay, this cash or bank account will tell you what is the total amount of cash or money available with the firm and how the assets are realized and how the payments are made. Right? Now next we will learn journal entries. So the journal entries. What are the journal entries you are required to pass in this chapter? Number 1, for closing of assets, that means transferring the assets to realization account. Your entry is realization account debit to assets account. Okay, here including goodwill, these assets will include goodwill, that means goodwill should also be transferred to realization account, but excluding the fictitious assets, cash and bank balance. So fictitious assets, cash and bank balance should not be transferred to realization account. Number 2, for closing all the outside liabilities. Outside liabilities, that means liabilities not related to the partners, should be transferred to realization account. And the entry is liabilities account debit to realization account. What are the outside liabilities? Like bank loan, semi creditors, okay, bills payable. Then number 3, for sale or realization of assets. So once the assets and liabilities are transferred to realization account, then next step is to sell the assets and pay off the liabilities. So you need to pass the entries for that. So this is sale of assets. So cash account or bank account debit to realization account. For assets taken over by partners, yes, when the firm comes to an end, either the assets have to be sold or the assets are taken over by the partners. If any of the assets are taken over by the partners, then you have the entry concerned partners capital account debit to realization account. If A has taken over the asset, then your entry will be A's capital account debit to realization account. To pay up outside liabilities, that means this is the liability paid by the firm. So you have entry realization account debit to cash or bank account. When liability is assumed by a partner, here the liability is paid by the partner, or the partner takes the responsibility of paying off the liability. So you have the entry realization account debit to partner's capital account. Like supposing Sunday creditor is to be paid by A, then your entry is realization account debit to A's capital account. Next is when assets are given to a liability. That means liability is paid not in cash but by giving asset. Then there will be no entry for that. No entry for this. For partners loan paid, partners loan account debit to bank account. For profit on realization, realization account debit to partners capital account, and if this profit should be distributed in profit sharing ratio. If there is a loss, we will reverse the entry. So you have the entry partners capital account debit to realization account, again in profit sharing ratio. For accumulated profit or loss, that means the past profits which are undistributed, right? Like profit and loss account credit balance, general reserve, reserve fund, workmen's compensation fund, all this should be distributed to the partners in the profit sharing ratio. So you have the entry profit and loss account debit, general reserve account debit, reserve account debit to partners capital account, to all the partners. Then you have the entry for realization expenses. If it is paid by the firm, realization account debit to cash account or bank account. And if it is paid by a partner, then you have the entry realization account debit to partners capital account. Next one is paying off capital. So you have the entry partners capital account debit to cash or bank account. So these are the necessary journal entries required to be passed in the dissolution of partnership firm. Thank you.